May has been an eventful month, with European markets uncertain about the growth outlook. There's been a re-emergence of Greek debt crisis, and in the UK, Brexit looms. Now, I'm here with Mark Burgess to discuss this and more at Columbia Threadneedle Investments. Hi, Mark.
Afternoon, Deb.
Good afternoon. Now, there's been a lot of changes in the markets recently. Which areas will lead the market over the next year and why?
You're quite right. There's been a lot of sector rotation, as we call it, where different sectors have performed well and different sectors have performed badly. Now, what we saw during the course of the first part of the year were a lot of last year's losers, a lot of the sectors that did badly last year rallied quite hard, and in particular the energy and commodity sectors rallied very sharply on the back of a rising oil price and general large underperformance. That's come to an end to a large extent, and I think as the market's reassessing the outlook for global growth, some of the long-term growth stocks are starting to perform better, and that's a trend we would expect to continue.
Now, as you just mentioned, low growth, there is low growth and low inflation. Do you think that this is all going to come to an end?
There are some signs that inflation is ticking up in North America. That would be the only part of the world where that would be the case. Perhaps that's not surprising. It's got the lowest level of unemployment. Unemployment is now 4 point something, so fallen very sharply from the high levels that we've seen elsewhere in the world. Your unemployment, as we know, is still 10% plus in many parts of Europe. Yes. But it's fallen to 5%-ish in North America, and at that point you start to get to see some wage pressures building up. We're seeing that modestly, but we are seeing it, and I think that's something we need to monitor very closely, because low inflation has been a defining feature of markets over the last 6 or 7 years, and if that is turning, then that's something that could have quite a profound impact on investors.
Now we're moving on to Greece. How does it affect the investment landscape?
Well, clearly Greece was a significant feature in markets 3 or 4 years ago, where people worried about defaults and investors were very focused on what that meant for the Eurozone, for the Euro, for the financial system more broadly. We've had a series of measures and reforms come through, and also a number of bailouts. The latest bailout, I think, is probably quite positive. Certainly investment markets have taken that very positively, particularly Greek debt has performed well. And I think Greece is becoming a less and less important. I mean, clearly for Greece it's critically important, but in terms of its potential impact on the financial system, it's becoming a less and less important feature, which is unequivocally a good thing.
Yeah, absolutely. Now, if we're looking at our own situation here at home, touching on Brexit, do you think that the increased speculation is impacting portfolios?
It definitely is impacting portfolios. It's impacting markets. It's been impacting sterling, which has borne the brunt of the sentiment with regards to what might happen. Just to recap, we saw sterling fall very sharply as fears began to rise that Brexit might actually happen. And for a while, the polls were running at sort of 50-50. And so investors started to hedge their bets by selling sterling assets and selling sterling specifically. The polls in the most recent past have started to show a more likely outcome that will remain. Clearly, there's a long way to go. We've still got 3 weeks to go before the poll itself, and there is still a degree of uncertainty. But the polls are beginning to shift towards indicating that the UK public might vote to remain in. Interestingly, the bookmakers, it's a much more positive vote in favour, so that's running at about 70-30. And were that the case, were we to vote to remain in, I think there would be a rally in financial markets, and there would be a rally in sterling specifically.
Okay, well, let's hope for positive outlook here. And as always, we end on a positive note. Where do you see opportunity?
I think equities still look relatively attractive. We've seen an okay earnings season. We think bond yields are going to stay relatively low. There is a possibility of an interest rate rise this year in the United States, but even so, we think bond yields are going to stay low. So yielding assets will remain underpinned. Credit looks okay. Defaults risk is picking up a bit in North America, but certainly in Europe, credit, both investment grade and high yield, still offers an attractive yield. So we still think there are a number of places that you can put your money to work positively.
Well, thank you very much for your time, Mark.
Thank you.
And thank you for watching. We'll be back again next month.